So I think one of the interesting things talking dividends was kind of what do each of us look for in dividends.
Right.
And
We're both young guys, though, so we
Yeah.
don't think, oh, I need dividends right now.
no, but I will say I'm trying to build out a larger portion of my portfolio that is dividend oriented, just so that I have that stability. You generally don't see huge swings with dividend stocks just because they tend to be a little bit more stable, a little bit more established in the sectors that they operate in.
Well, yeah, not only that, but history bears this out. The last 100 years, what percentage of total returns in the stock market came from dividends? It was like 40% of all your returns came from dividends or something. Yeah,
I didn't
just
know
something
that.
crazy. Yeah, and it's like, well, yeah, I mean, it's every American corporation all lumped in together. That might be true. Anyway,
Yeah.
So what do you look for, Dylan?
So I like three things as kind of like a quick checklist. I like operating in an industry with high barriers to entry. Not always something you're going to be able to find, but if you can, it kind of insulates you from some competitive pressure. It makes the next 5 to 10 years a little bit more foreseeable than if you're in an industry that's very easily disruptible.
Right.
So I think that's one thing to watch. Obviously, you want something that has available growth avenues, right? So just because there's been recent, great top line growth and consistent bottom line results doesn't mean that that's something that will continue unless they have a plan to, enter new markets or develop new products or something like that. So you want to see that while there's a strong core business, there are also elements that project out well for the next 5 to 10 years at least. And I think something that all dividend investors are very conscious of is the payout ratio. And so something that you want to just keep in mind is how much are they paying out as dividends, both as a proportion of net income and free cash flow, and is that something that is both sustainable and has room to grow? And so, if your primary reason for investing in a company is, you like the yield and, all of the things being equal, the business looks good, then are they going to be able to continue to grow that yield?